What's going on, everybody? It's Big T with GreenWallSt.com. I run a trading community designed to help you become part of the 5% of traders who actually make money in the markets. And today we're going to be looking at how we do this. So another live trading video, this time on IPW from this week. So $3.50 stock. General, like, bigger picture idea is very similar to all the other live trading videos that we do in the morning. You can see we're 7 minutes past the open. Big gap up, overextended, but selling off pre-market, right? So it's up, but it's down at the same time. And that's key because stocks that are up too much still have room to fall, and you want to wait until they are downtrending in order to bet that they will continue going down. A lot of times in the markets, people will try to find stocks that are down and they want to buy them, in case they go back up. But in reality, what happens is weak stocks typically get weaker, strong stocks typically get stronger. And therefore, we just want to get on the right side of the trend and, try to join it instead of fight it. So, bigger picture idea in the morning. Yes, the stock is up, but we're also starting a downtrend. So anyway, idea is to short bounces in the morning on this stock. And originally I wanted it, you can see the scale here, how we're up, we touched 5, sold off and started downtrending. Volume weighted average price is above us, meaning most people in the stock are above us. And if we bounce into those people, they are likely to sell because they're underwater and losing money. What's the first thing you do whenever you are losing money on a stock and then it comes back to your entry? You take that shit, right? Because you don't want to lose money. That's what most people do. That's rational thinking, and that's, kind of the basis of the trade. So wanted it to really push through VWAP. I love when these really squeeze out further and give a better risk-reward profile, but didn't do that. Saw it starting to really struggle in the 360s, 370 range. So I put on like a fourth size position. I wanted 5,000 shares. I put on like 1250. And that's all I ended up getting on this trade. So, it's one of those times where I'm not trying to force full size on a trade that doesn't deserve it. You don't know how high a stock is going to bounce. So unless you're really at that do or die spot where you can put on your full risk, it's tough to put it all on in one go, because if you put it all on in one go at 360 and then it bounces to 4, well, you're fucked. If it goes to 450, then you lose. So you have to kind of scale into that trade, and that's what I did. So got an average of 360 here. If it was to continue higher, I still, like I said, had plenty of room to add more shares and build a good average in the morning. But I didn't do that. You can see we start to struggle in the 360s. We lose the 9 EMA here and start trending back further down. But because I've got smaller size on, I don't get impatient with taking the cover. So I'm up, like $200 or something on this trade. But because I'm small size, it doesn't really matter. I can hold on for the bigger move. This is why sizing is so important. So I wait until we start breaking these lows here in the 330s. And once we actually kind of flush out and start running people stops in the 320 area, I cover it. So I think we get, one more bounce here. Not worried. If anything, I'm hoping the stock bounces further from here. That way I can put on a bigger position, but we end up just kind of rolling over and failing. And sooner or later, there we go. You see the volume come in. Everybody stops being ran. Anybody buying the dip, they are panicking out. And I use that panic, that volume, as the liquidity for my cover. And just like that, $498.72 trade. Nothing crazy. You're not going to get rich off one trade. You're not going to go broke off one trade. That's the point. You find these high probability opportunities and you take them, and one trade shouldn't dictate anything. It's one trade in the process of the next 1,000 trades, and you do this over and over and over and over again. And these are the types of trades that have long-term positive expectancy. So everything we talk about in all the videos, hopefully that makes sense. GreenWallSt.com, we are still running for a limited time, a 5-day free trial. It's about to go away. So if you want to take advantage of that, definitely do it now. By the time we get to Christmas or the new year, it will be gone. So come spend a week inside the room, see if trading's for you. And if not, and you just want to watch the videos, that's fine too. Thank you all so much for tuning in, and I will catch you right back here next time. Peace out, everybody.